In the metals quadrant, I want to talk about gold, even though gold isn't really doing much on a daily basis, down about 15 basis points today, so not even 1/4%. You can consider that in the grand scheme of things unchanged, but gold is coiling. It's creating quite a bit of sideways price action after the long rally that we've seen end of 2018, beginning of 2019, all the way up to 1300. We tested 1300, failed at it, haven't really gotten above it in any meaningful way yet. And that coiling could signify another ramp up, and that ramp up could potentially be to 1350, given that we've also got a golden cross forming. That golden cross basically happened today. That's when the 50 crosses above the 200-day moving average. We've got a death cross is the opposite of that, where the 50 crosses below. This, however, is a golden cross. It did happen today. Now, what generally happens, just so you know, from a price action perspective, on a golden cross or a death cross in the reverse, the golden cross, you usually get a quick spike, and then you get a fall all the way to the intersection of that cross. That's usually the point to get long or to look for a longer term position for that golden cross to actually push. You look for the 50-day moving average to push the price higher. It's the faster moving average, so it tends to move more quickly. On the fundamental side, that would probably mean a breakdown in US-China talks or some sort of critical geopolitical event. Could involve Iran. We don't know. It's not predictive in that way. It's just predicting a pretty significant price move higher. They are not reliable to even a 60% level. So just because the golden cross happened, they can turn right back and turn right back into a bear trend. It is not an infallible indicator. It is just an indicator that is talked about. And the dollar will be critical in this whole equation. The dollar broke out, or I should say broke down, 3 days ago, down below its sideways channel. It is now going up and testing the bottom of that channel. So if you imagine the channels like this, dollar has now broken down and gone up and is hitting that lower end of the old channel. So if it falls from there, that's an extension of that breakout, and that's a confirmation that the dollar index is going much lower. If it does, that certainly could drive gold prices higher and give sort of a tailwind to that golden cross price action.